Today I want to talk to you about a decision that is probably the most important decision you will make, having already made a decision to operate your own business, and how this decision will impact the wealth you create during your business lifetime. There are predominantly three different business structures at use in Ireland today. The first is sole tradership, the second is partnership, and the third is limited companies. And each of these structures are somewhat different to the other and certainly will have a somewhat different impact on the income you can earn, the taxes you will pay, and ultimately the wealth you will generate. So let's start at the beginning, and we'll talk about a sole trader. Basically, a sole trader means there's no difference between the business you're operating and you. A sole trader's income is 100% taxable as personal income. And not only is it 100% taxable as personal income, the point to be made is that the risk you're taking as a sole trader is very different than the risk you will take as a limited company, which I'll talk about in a while. What I mean is that a sole trader's risk is risking everything he or she owns. The commercial activity you're engaged in is done as an individual, which means that if something goes wrong, everything you own as an individual is at risk. Like most things, there are pros and cons. The pros to a sole tradership, and often the pros in what I've heard from customers over the years, they're told that a sole tradership is cheaper to operate. They're told that a sole trader is easier to establish. And while these things are true, you have to look at the ripple effect. You have to recognize that there's always a reason why something is cheaper. And in this case, it's what I've mentioned. Your business is no different to you, your assets. And if something goes wrong in your business as a sole trader, you are potentially liable to lose your house, lose your car, lose your pension fund, lose everything. Now, there are mandatory sole traderships. Auditors have to do their business as a sole tradership. Medical professionals have to be personally responsible for their medical activities. But other than those people, I see no reason why anybody would start trading in business as a sole trader. To me, the risks are too high. The other thing to say is the tax breaks available to sole traders relative to those available to limited companies are poor in the extreme. Tax breaks like retirement funding, tax breaks like SURE, I'll talk about these again in a minute, while available to limited liability companies, are not as available to sole traders, or indeed are available at much lower levels. The last thing I want to say about sole tradership is be careful who suggests to you to be a sole trader. There are a number of accountants, for example, operating in Ireland, whose operating license means they can only deal with sole traders. It means they aren't able to deal with limited liability companies. And if you're getting advice from somebody in that position, there's a likelihood the advice is biased, because telling you to become a limited company is telling you to bring your business elsewhere. So even in the accountancy world, there can be bias towards one of these structures other than another, simply because of the licensing that those accountants operate under, sole traderships. The next thing I said I'd talk about is partnerships. Now, partnerships are basically sole traderships where there's more than one owner of the business or operator. So a partnership is a sole trading activity where there's two or more individuals involved. And they therefore, because they're sole traderships, they have the same liability problems as I've just mentioned. everything the partners own is at risk to their commercial activity. And I, for one, am very definitely opposed to that type of liability. The other risk you need to be aware of in a partnership is that if there are two of you or three of you, depending on how the partnership agreement is underwritten, you can be responsible for your other partner's activities. So, trust comes into this. The ability to trust somebody to be your partner who won't run away and leave you holding the can, as it were. So there is an extra risk in a partnership because your assets, your wealth, your home, your pension fund, your car may not only be at risk based on your own commercial activities, but may be put at risk by your partner's activities. Again, where recommendation is concerned, I find it hard to see why a partnership would be established over and above a limited company. The same tax rules apply as I mentioned earlier. They do not attract the same tax concessions that limited liability attracts, and therefore are, in my opinion at least, to be avoided. Finally, we come to the limited company. And a limited company, guys, does exactly what it says on the tin. It limits your liability. It's hard to put into euro and cent terms that protection, but it is massive. It means that in terms of your new business, you are only liable for losses on the capital you invest in the business. Your home is separated, your pension fund is separated, your car is separated. Now, it is worth mentioning, I suppose, that limited liability can be removed by the courts and has been removed in the past for fraudulent activity. So it's not a license to do anything you like, but it is, within reasonable trading activities, a full protection of your assets. The risk inside a limited company, therefore, is considerably less. Now, as I said about sole traderships, there's two sides to every coin. What's the disadvantage, if you like, of a limited company? Well, the disadvantage is complexity and cost. If you decide to open a new business tomorrow as a sole trader, you can open tomorrow. If you decide to open that business as a limited company, you have to either purchase a limited company off the shelf or establish a new limited company, get it properly registered with the tax authorities and all of that. And there's cost associated with those activities. But as I've said, cost is justifiable in this case because even though a limited company might cost a couple of €1,000 more to establish than a sole tradership or partnership, the very fact that your liability is limited is, in my opinion, most often worth the extra few bob. And not only is there an extra few bob cost, but there is also, as I mentioned a while ago, superior tax benefits. Those of you who are regular listeners or regular viewers of our video output will know about SURE, Startup Relief for Entrepreneurs. And what this allows you to do is, if you're establishing a new limited company, it allows you to write off your capital investment relative to the income tax, the PAYE you paid in the previous 6 years. So there is an immediate tax break within a limited company as opposed to a sole tradership. There's also longer term benefits. Small benefit exemptions, subsistence allowances, electric vehicles, loaned goods. All of these I've talked about before, and I won't go into any great detail here. But all of those are available inside a limited company, and few are available to sole traderships or partnerships. And finally, there's the sharpest tool in the box. There's the retirement planning legislation here in Ireland. The simple truth is that a limited company in most circumstances has far greater allowances in terms of payments to tax-free retirement vehicles than a sole trader or partnership does. This means that more of the money you earn can be extracted from the business at a zero tax liability. It can be invested for periods of time at a zero tax liability. And depending on where you're resident at the time when you dip your hand in that cookie jar, other tax benefits can be available down the line. If you are starting a business, if you've already started a business as a sole tradership or a partnership, I would urge you to look at the differences between limited companies, partnerships and sole traderships. Most financial decisions can and should be brought down to three different factors. What is the cost of doing something? What's the benefit of doing that? And what are the risks associated with those actions? At a cost, benefit and risk analysis, a limited company in 99% of the time is going to be the best alternative. If you have the ability to change to a limited company or to start your business as a limited company, then certainly my view is that is what you should do. While we can give reasonable amounts of information in these podcasts or reasonable amounts of information in the videos we put out on various social media platforms, they are but snippets of information. And recently, due to popular demand, we have started to put together what we call a masterclass. This is a way for you to not only hear the costs and benefits and risks, but to see them in action, to have them fully explained to you. So I would suggest, if you want to know more, there is no better place to learn more about this and other financial matters than the masterclass that's available. Check it out as soon as you can.